Hi, everyone. My name is Allie Johnson, and I'll be moderating today's webinar. I'll begin by introducing the Capital Pathways program, introduce myself, and then pass the mic to our guest speaker, Ford Scott, who is a lender relations specialist based out of the Richmond, Virginia, U.S. Small Business Administration District Office. He'll introduce himself and take us through a presentation on SBA loan options. As we go along, please feel free to ask questions using the Q&A function. We'll respond to them at the end of the session. And for any questions that we don't get to today, we're happy to address through our no-cost one-on-one services or connect you with resources that can help. We'll share a recording and slides of the presentation afterwards. So, what is the Capital Pathways program? It's a program funded by the U.S. Treasury SSBCI initiative, sponsored by the Virginia Department of Small Business and Supplier Diversity, and hosted by the Virginia SBDC and George Mason University. We'll start today with a program overview, then go through program eligibility, and finish up with an outline of the services we offer. Capital Pathways is a no-cost, specialized SBDC program that helps small businesses and nonprofits build the systems and habits needed to become capital ready. This matters because businesses and nonprofits that are less prepared can often self-select out or fail their loan or funding applications. And these early failures correlate to a lack of adequate capital. Additionally, higher cost alternatives often don't build long-term capacity. Ultimately, only about half of the loan amounts requested actually reach small businesses. So to put things in perspective, about 25% of small businesses need access to financing for growth and preserving cash flow. However, only 20 to 30% of those who apply actually get their loans approved. So to help address this challenge, Capital Pathways has created a path to financial and legal readiness. Our program offers an immersive, hands-on group experience paired with one-on-one support. Who's eligible, you may ask? Very small businesses and nonprofits at any stage who face challenges accessing traditional financing. Our services include a guided self-assessment, legal structure validation, financial skills and tools, loan application readiness, and credit building advising. We start our process with a self-assessment that pinpoints your business's key gaps so we can connect you with tailored resources, either through our program or other resources that can help. Under our legal structure validation activities, our in-house advisors can help you through basic legal questions, and we partner with a law firm to answer more complex questions on topics such as business registration, trademarks, and contract and agreement reviews. We also offer financial webinars on topics such as financial basics, as well as financial statement preparation and QuickBooks training. Our one-on-one tailored support covers business foundations, profitability and pricing, financial forecasting, financing operations and readiness, financial statements and tools, as well as loan readiness and lender preparation. These loan readiness application readiness services include both webinars and individualized support. Our webinars cover topics such as what lenders look for in loan applications, interactive mock loan interviews, sample application analyses, and of course, SBA loan options. We also have a partnership with a lender who provides one-on-one support to those looking for capital. Finally, our credit building advising will help you review and interpret your credit reports as part of building an individualized credit improvement plan to strengthen your credit and help you qualify for better financing options and terms. So if you're interested in getting started with the Capital Pathways program, you can reach out to us through our website at virginiasbdc.org/programs/capital-pathways, or you can contact me directly at capitalpathways@virginiasbdc.org. I'll go ahead and share my email and our website in the chat for everyone to have. Now I'd like to shift over to introductions. As mentioned before, my name is Allie Johnson. I am today's moderator, and I serve as the Program and Intake Coordinator for the Capital Pathways program. I have a professional background in economic development, small business support, and access to finance projects, both domestically and internationally. Our session today will consist of a 90-minute presentation. Again, feel free to ask any questions throughout using the Q&A function. We'll respond to them at the end of the presentation. And as I said, for questions that we can't get to in this webinar, please feel free to email me. We are happy to address them through our no-cost one-on-one services or connect you with resources that can help. I will share a recording and slides of this webinar in a follow-up email. Now I'd like to pass things over to Ford to introduce himself, tell us a bit about your background, and start the presentation.
Thank you, Allie. I'm working on sharing my screen, so give me just a second. Well, okay, I'm going to do one more thing here. Okay, so we sometimes here have difficulties with bandwidth for our internet connection. So I'm going to just wave to you, and then I'll come back on camera after my presentation. So I'm going to turn my video off now. But my name is Ford Scott, as Ali said. I'm what they call a lender relations specialist with the SBA. My main function is to work with lenders to help them understand our lending programs and help them navigate the process, which ultimately results in the loans made to small businesses like yourself. Today, we're going to talk about approach a lender to apply for a loan, and then some other information. So let's see if my system will work here. Okay, there we go. So SBA does not offer grants to either start or grow a small business. We also do not lend directly, except under our disaster lending program. We do lend directly if there's an earthquake or a hurricane or something like that. Businesses can apply for disaster assistance. But on a regular day-to-day basis, we are a guarantor. So a lender will make the loan to the small business, and SBA provides a guarantee to that lender, which means that if the borrower defaults, SBA will reimburse that lender for a portion of their loss. And that's SBA's way of encouraging lenders to lend to small businesses. That guarantee can help offset some things, not all things, but it can help offset the risk for the lender if you're a startup, if there's insufficient collateral. In fact, that's probably the most common reason that lenders will use our programs, is because there's a shortfall in collateral. Most lenders want to see a fully collateralized loan, but with SBA's programs, we don't require that as long as repayment ability is shown and the lenders followed our collateral policies. Then there could still be a shortfall there, and we're fine with that. You might need some non-standard repayment terms, and there are industries, that lenders are sometimes not comfortable with. For instance, restaurants tends to be a common industry. I wanted to cover a few aspects of what is not eligible for SBA financing. So nonprofits are not eligible under any of the three programs that we're talking about today. There's sort of one small exception, which is if you happen to be a nonprofit child care facility under our microloan program, that potentially might be eligible, but generally nonprofits are ineligible. The second bullet here is a very common question that we get from potential borrowers. An SBA loan, again, the three programs we're going to talk about in a minute, none of them can finance what we call investment properties. So if you're going to buy a building, for instance, and rent it out, then that is ineligible. We're not here to help developers and landlords. We also cannot help for someone who wants to buy houses, fix them up, and then rent them out. that's ineligible. Apartment buildings are not eligible. Mobile home parks are not eligible. If you happen to be a nursing home or assisted living facility, you potentially could be eligible if you are providing something beyond room and board. So you're providing healthcare and medical services, that would be eligible. But if you're just providing room and board, then that would be ineligible. We can't finance pyramid or multi-level sales distribution plans. The old example of that used to be Amway. I'm not sure what the current example, I should come up with a current example, but I don't have one. Any activity that is illegal on the federal, state, or local level is not eligible for SBA financing. So, for instance, in some states, marijuana is legal, but on the federal level, it is illegal. So it would not be eligible for any SBA program. You can't have a business that restricts patronage for any reason other than capacity. So you can't have a men's only or a women's only health club. The health club would have to be open to everyone. You can't have a business that has an associate, and generally an associate is anybody who owns 20% or more of the business that is currently incarcerated, is serving a sentence of imprisonment, and you can read the language here, or is under indictment for a felony that involved financial misconduct. So there's a question on the application. You'll be asked that question, and if you say no to all of that, then you're eligible. Also, if the business has a prior loss on a federal government debt, that doesn't have to just be an SBA debt. It could be, let's say you had a home loan that was tied to the federal government somehow. If there was a charge off for that prior loan, or the loan is currently delinquent, then you would not be eligible to apply for an SBA loan. And then the final item here, was effective March 1st. SBA borrowers have to be 100% owned by either U.S. citizens or U.S. nationals. Legal permanent residents are not eligible now to have any ownership interest in the applicant or the borrower. And so the first program we're going to talk about out of the three is called the 7A Loan Program. It accounts for probably at least 90% of our total financing that's provided. You'll see here it can finance pretty much any legitimate business purpose. So you can acquire, refinance, or construct, improve commercial real estate. Again, only owner occupied. I don't have it on this slide, but SBA does have a requirement that if you're buying a building, your business has to occupy at least 51% of the rentable property. If you're going to construct a new building, you have to occupy at least 60% of the rentable property. And that's how we get away from that investment real estate that I talked about a minute ago. You can get short and long-term working capital. You can refinance business debt. You can purchase and install machinery and equipment, buy furniture, fixtures, and supplies. We can finance changes of ownership, so that can either be a complete change or a partial change. Franchise operations we actually have a directory of eligible franchise operations. And then you can have multiple purposes, which you can combine into one loan. So the maximum loan amount under this program is $5 million. SBA does not set a minimum, but I will let you know that many lenders, and again, we only make these loans through lenders, they will have their own minimum. So we don't keep a running log of each lender and what their minimum is. You will need to ask the lender what their minimum is. Many of them will not lend for, let's say, 50,000 or less. Some of them will not lend for, even 150,000 or less, something like that. We do have some subsets of the 7A program, but I will tell you, I'm going to send to Allie, and she will send out to you a loan chart which outlines the different 7A and other programs that we have. But it's not your job to get into the weeds and figure all this out. The lender that you work with will have a discussion with you and then determine which program fits your needs. I will mention the SBA Express program, which is a subset here, only because that program, if you're looking for a line of credit, lines of credit are available under that program up to $500,000. So you'll see that when you get the chart, and then you'll see the other the other programs as well. Let me back up here a second. So I think I made this clear, but I'll just say it again. So with the 7A program, you apply through a lender. You don't come directly through SBA, and we will provide you later a list of lenders and then also another avenue for connecting with lenders. So the second program is called our 504 loan program. It provides long-term fixed rate financing for two types of fixed assets. You can again buy or construct owner-occupied commercial real estate. And the second use is long-term machinery and equipment. It has to have a useful life of at least 10 years. And when we're talking about that equipment, we mainly mean equipment that is, well, we only mean equipment that is put in place and stays in place. So the old example of that used to be a printing press. Uh, it's installed and it doesn't move around. So you can't finance trucks and things like that under this. They call it rolling stock. You can't finance that under this program. It's for long-term machinery and equipment. The way this works is they sometimes refer to this program as the 50-40-10 program. And the reason for that is there are three parties involved. There is a commercial lender, so that could either be a bank or a credit union. We sometimes have small business lending companies as well. They would provide you 50% of the total financing that you need. SBA would come in for generally 40%. And because SBA is coming in for that 40%, you will receive a 25-year fixed rate loan, which generally will have an interest rate that is lower than what you would be able to get conventionally. So that's a big benefit to you. And then you will come to the table with a minimum of a 10% cash injection. That is another benefit because if you're going to get a conventional loan, that injection could be, 25, 30%. So the injection is generally going to be lower under this program. I will tell you that 10% will be increased by an additional 5% if you're a business that's less than 2 years old, or you're buying what we call a special use building, which is something like a hotel or a gas station, which is difficult to convert for resale. So the most you would have to inject is 20, but generally for most borrowers, it's going to be 10. There is no maximum what we call project size under this program, but SBA's portion is limited. So you'll see there our portion is generally limited to 5 million, but it can go up to 5.5 million for small manufacturers. And you'll see there at the bottom, you cannot use it for things like working capital inventory, any sort of short-term need like that. But you can combine a 504 with a 7A, and we see that on a regular basis. One example is where someone's buying a business, they will finance the real estate through the 504 program, and then they will finance the actual change of ownership through the 7A program. We also see it where, you might get a 504 loan for the real estate, and then let's say you need a working capital line of credit or something like that. You could use the Express program in combination with the 504 program. The third program is our Microloan program. It provides loans up to $50,000. And the way this works is the SBA actually lends money to specially designated intermediary lenders, and then they turn around and lend the money directly to you. They are required as part of this program to also provide you technical assistance. So you will get the technical assistance as well. You do apply directly through the microlender. You'll see when I send you, well, actually, you'll get this slide deck, and when you click that link there, you will see that in Virginia, we do have some gaps. We don't have a microlender right now that covers the Richmond area or the Hampton Roads area. We do have a lender that's in Stanton that covers that area there, Augusta County, and that sort of expanding out from there. We have a lender in Charlottesville that covers that area. And then down into Southside Virginia, we have one in Abingdon that covers the Southwest Virginia, and then also has a small piece in the upper top of the state. And then we have another microlender that covers Prince William, Fauquier, those sort of counties up there. You'll see here in terms of what you can use the funds for: working capital, inventory, supplies, furniture and fixtures, machinery and equipment. You cannot use it to finance anything related to buying real estate. You can potentially use it to pay off existing debts, but only if you can show some sort of improvement in your debt position or cash flow. And you can discuss that with the lender. Now we're going to talk about what you should do before approaching a lender. So Allie mentioned that, sort of a stumbling block, if you want to call it that, is that if you're not well prepared, you may not be successful in being able to borrow the funds that you need. So the best way to improve your chances is either to prepare a loan proposal or a business plan. If you're asking yourself what's the difference between the two, so a business plan is sort of your overarching document for your whole business. You know what your plans are. It would include financial information and some different things like that, but it's probably more a more expansive document than a loan proposal. So a loan proposal is more streamlined and focuses specifically on obtaining a loan. Lenders will look at that proposal and or your business plan to look at your management experience, that you have a thorough understanding of the marketplace. So you've looked at your competition and what demand there is for your product or service. They'll also look at the relevant financial information and will want to see that demonstrates your ability to repay the loan. Allie's team is there, as she said, to help with, looking at your projections, potentially looking at your historical information and making sure that you understand that so that you can speak to that when you're meeting with the lender. Another thing I'll send to you is I have conducted a separate webinar on how to prepare a loan proposal, and I'll send that to Allie and she can share that with you. So the bottom of this slide. So the four things that you should have at a minimum before you approach a lender are how much money you need. Allie's heard me say this over and over. So business financing is not like auto financing or mortgage financing. So, I bought a car last year. I went to my lender. I said, how much do I qualify for? They gave me a figure, and then I went out and looked for a car that was, within that limit. But business financing does not work that way. The lender, when you're applying for a business loan, they want you to come to the table with a specific dollar amount. And then you'll see the second bullet here. They want you to be able to outline in detail what you'll use the money for. So if you're buying equipment, they will expect you to have gone and gotten some quotes for how much that equipment will cost. You'll if you need working capital, you'll explain why you need that, and then hopefully your projections will show the need for that. Let's say you're a startup, and in the first 3 to 6 months, you need that working capital to cover your expenses until you can generate enough revenue to meet your obligations. The third item there, which is a big focus, of course, for lenders, is how you'll repay the loan. Again, that will be shown either by your historical business financial statements or your projections if you're a startup. And then what will you do if your business is unable to repay the loan? So that's where it gets to the collateral. You should outline what collateral is available. So if you're buying equipment, the lender will take that as collateral. If you're already in business and you have some other collateral there, you would discuss that and outline that for the lender. Let's see. In terms of credit history, I believe Allie mentioned this. I know what she mentioned. So she mentioned earlier that if you need help, reviewing that history and, maybe clearing some things up, I believe they can help you with that. But most, if not all, SBA lenders will pull a copy of your personal credit report. You'll see the 3 credit bureau agencies there: Equifax, Experian, and TransUnion. we would definitely recommend that you get a copy of the credit reports from each of these three agencies before you apply, just to be sure you know what's on there. I heard at one point that about a quarter of all personal credit reports have some sort of error in it, so it's worth checking to clear those up. And then, of course, if they're past due accounts, you should make every attempt to bring them current. Uh, You'll see the third bullet here. I do this myself. You can get a free copy of your personal credit report at this website. Every U.S. citizen can do that. And they won't give you your score, but they will give you the credit report. So you can do that once per year. If you do need help with credit counseling, I mean, you can talk to Allie's team, but I know that the State Corporation Commission publishes a list of credit counseling services. It's up to you to do your due diligence to make sure you're working with a reputable firm, but you could check their website for that listing. And then on the commercial credit reporting side, there are three agencies: Dun & Bradstreet, Experian, and Equifax. The links I have here should take you to an area where you can see the free information potentially for your business. But I will tell you that with these three commercial credit reporting agencies, they have things like they could set you up to monitor your commercial credit report, but there's an ongoing fee for that. So again, it's up to you to decide whether you want to uh, take advantage of that service or not. So what will a lender look for when they're reviewing your business application? We covered a little of this already, but owners and operators of good character, that's where they're going to look at your credit history to see if you've been willing to meet your debt obligations, feasible business plan, your management expertise and commitment for the success of the business. If you happen to make a decision where you are not going to be the sort of the day-to-day manager of the business, you're going to hire someone in your business plan or loan proposal. I would definitely outline the experience of that management team so that the lender can understand that, maybe if you are lacking in some expertise, you have management team there that can help you with that. Sufficient funds, including the SBA loan to operate the business on a sound financial basis. So that's where your projections could show will show the lender that. Adequate equity invested in the business, sufficient collateral. And I'll stop here just for a second we get questions related to the difference between an equity injection and collateral. So an equity injection is generally cash or some sort of asset. It could be a tangible asset that you're contributing towards the requested project. That's you may have heard of the phrase "skin in the game." That's a lender looks for that to determine that you are showing a commitment to the business and the operation. And then collateral is different. It's an asset pledged to secure the loan. So that would be property, equipment. It could be accounts receivable, which will be liquidated by the lender if the business defaults on the loan. So the common question we get is, okay, I own a home and I have some equity there. I'm going to use that as my equity injection. Well, that would not count as an equity injection because it's not cash in. That would be counted as collateral. You potentially would be pledging that as collateral. And then, like I said, if there's a default on the loan, the lender will liquidate that and then apply it to the balance of the loan. And then the last item there, we already mentioned this, but the main focus of any lender is how they're going to be repaid on time from either historical, shown either from historical financial information or projections. Some common questions. I touched on this. Do you apply directly through SBA? No, you always apply directly through an SBA lender. We don't accept applications here. All of your documentation would be given to the lender. And then in terms of the paperwork, the next slides we're going to cover are an outline of what the SBA lender will ask for. It can't cover everything. Each situation is different. So there shouldn't be, but there potentially can be something that we don't include here that the lender would ask you for. So here is the documentation that's required on SBA loans. The lender will ask you, you'll see the first bullet there, for all information and forms necessary for them to make an informed credit decision. Every 7A application will include what is called an SBA Form 1919. It's filled out by the business. You don't have to have a separate one for each owner of the business. It's just one form for the business. Someone that is authorized to sign that statement on behalf of the business would sign it, and then you would provide that to the lender. A personal financial statement is needed from every 20% or more owner of the applicant business, and also guarantors if they don't happen to own at least 20%. For SBA's policies, it has to be no older than 120 days, and it must include the assets of the owner, spouse, and minor children, even if they are not involved in the business. If you wanted to get an idea of what a personal financial statement might look like, you can click on this link here when you get the slide deck. This is SBA's form, the Form 413. The lender is not required to use that. They're permitted to use their own form, but that would give you an idea of what they'll ask for on a personal financial statement. If the lender is charging you a fee on your SBA loan that exceeds $2,500, there's a form that you have to sign. I'm not going to get into details on that. The lender will ask you to provide, actually, the lender is required to obtain, they'll ask you to sign a form. If you're in business, they will ask you to sign an IRS form, which gives them the authority to go to the IRS and get the last 3 years worth of business income tax returns. And what they're asked to do with that is it serves two purposes. One, to determine that your business is small. And then the second item is that the financial information that you've given to them matches what you sent to the IRS. We saw many times during the pandemic, we had a direct lending pandemic program. And what we saw many times was the business had not reported to the IRS the same information that they were giving to SBA to apply for the loan. And that's, was basically considered fraud, and that would not be a positive outcome. The lender will ask to see the last 3 years worth of business financial statements and or tax returns if you're in business. And then if you're a startup, they'll want to see monthly cash flow projections for at least the first year or until you're cash flow positive. The lender will need evidence of all licenses and formation documents required to operate the business. For example, a business license, articles of incorporation, partnership agreements, etc. The next item here, they'll ask you to provide a description in the history of your business. So they'll want to know the nature of the business, the length of time in business under current management, depth of management experience. And that's where I said if you're going to have a hired management team, you would include their background and their expertise as well. And if that information is in your business plan, you can just give them a copy of your business plan. You don't need a separate document for that. So I already mentioned this, the last 3 years worth of business financial statements. And then I've given you a link here at the second bullet. Allie's group is there, of course, to help you with the projections, but this is a link to a template if you're preparing projections. An equity injection, so we talked about that a little already. You would discuss any cash equity injection you're willing to provide. The lender will discuss what their minimum is, if any. I can tell you that on the SBA side, SBA does set a minimum of a 10% cash injection for startups. But beyond that, the lender is permitted to set their own minimum. So SBA sets the minimum there for 10% for startups. And then in some cases, when it's a change of ownership, we set it at 10% as well. If you're an existing business, you'll need to provide the lender with your current business debt schedule. So that would be an outline of who the creditor is, when you obtain the loan, what the balance is, the original amount, and things like that. I can actually send to Allie a sort of a template that you could use for that. You don't have to use it, but I can send you that. If you're refinancing debt as part of the loan request, the lender will ask to see a copy of the promissory note and a payment schedule for at least the last 12 months, showing that you've made your payments on time. If you're renting space, you'll need to give the lender a copy of your lease. And I'll just tell you, for SBA's programs, we require that the term of that lease, including any options to renew, uh, at least equal the term of the loan. So if the lender is going to give you a 10-year loan, your lease term, again, including options to renew, would have to at least be 10 years. If you're a franchisee, the lender will ask for a copy of the franchise agreement, what is called a franchise disclosure document, and any other documents that the franchisor is requiring you to sign. If you have any federal, state, or local citations which would preclude you from normal business operations, you should share that with the lender. You should also discuss any liens, judgments, bankruptcy filings, or pending litigation, including divorce proceedings. I'll stop here for a second. So I can tell you, on the bankruptcy side, SBA does not have any hard and fast rule that if you've declared bankruptcy in the past that you will automatically be declined. The lender will look at that as part of their overall credit underwriting, and most often they will be looking for some sort of reestablishment of a payment history. So let's say you declared bankruptcy 10 years ago, they're just going to want to see that you've reestablished credit and then been current since that bankruptcy filing. If you're buying equipment, inventory, or other assets, I mentioned this earlier, you'll need a detailed listing of what will be purchased, and along with your cost quotes. Collateral, we talked about that. So you would outline the business collateral available and then any personally held collateral that you have to pledge. If you're buying an existing business, you would need a copy of the buy-sell agreement. The second item is not for you to worry about. It's just for your information. We require that the lender either prepare internally or go out to a third party and get what is called a business valuation to justify the purchase price of the business, because an SBA loan cannot finance more than the valuation amount. The reason I mention that is that the lender is permitted to obtain that valuation.
Or you dropped off there for a second after you said the lender is permitted.
Oh, okay. The lender is permitted to pass the cost of that valuation on to you. Can you hear me again?
Yes, thank you.
Okay. You'll need to provide a pro forma balance sheet for the business. So that would be as of the date of the transfer, showing the assets and liabilities, net worth of the company, a copy of the seller's financial statements for the last 3 years, and then an interim statement that's no older than 120 days. SBA has a policy related to changes of ownership where we want to see a benefit to the business. So we don't really care that the buyer might be getting a great deal or seller's getting a great deal. We want to see some sort of benefit to the business itself. So two examples of that. Let's say you had somebody who's run a business for 30 years. They want to retire. If they didn't sell the business, they would shut it down. So that would the benefit to the business in that case is that is being preserved. The existence of it is being preserved. Another example might be, let's say you had an absentee manager, not absentee, an absentee owner, excuse me, who put a manager in place and they didn't really do a good job of running that business, and you have plans to come in and build that business back up. That would be an example of benefit to the business. If you're buying real estate, we would need a copy of the signed, or the lender would, a copy of the signed purchase agreement. And again, it's not your responsibility to do this, but the lender, in some cases, may be required to order an environmental report. Again, just an FYI that if that's required, they would pass that cost on to you. A couple of comments related to loan closing costs. So the lender is permitted to pass on to you closing costs for things like your out-of-pocket expenses, such as filing or recording fees, photocopying, delivery charges, collateral appraisals. I talked about the environmental investigation report. So they're permitted to pass that on to you. You can ask them whether they would be willing to finance that in the loan amount, so you don't have to pay it out of pocket at closing, but they are permitted to charge you for that. And if your loan request involves the acquisition or construction of owner-occupied commercial real estate or business acquisition, I may have already said this, the cost of any appraisal or valuation will be passed on to you. I put this slide in here because the first few times we did this webinar, there were several questions about this. So every SBA loan requires what they call a personal guarantee from every 20% or more owner of the business. That requirement cannot be waived. It's just a standard requirement. There may be some cases where somebody who owns less than 20% might also be required to personally guarantee. And I provided here, the third bullet, a copy of SBA's form, although the lender is not required to use our form, but I put it here so that you could look at what is involved with a personal guarantee. And then the last item here is it's not an SBA site. I hope I don't get myself into trouble, but it's an Investopedia site that explains what a personal guarantee is, and gives you more information on that. So that was the preceding was related to the 7A program. It related to the 504 program. The Certified Development Company, and again, you'll have that link from this slide deck earlier in the slide deck. They will walk you through all of this, so you don't have to be an expert on this. I'm just giving you this information as an FYI. If you wanted to go look and see what the CDC will ask you for, you can look at this form, this 1244 form. So the pages 1 through 4 is completed by you, and then you'll see there at the last sentence of this slide, it tells you which exhibits you'd be asked to provide to the CDC. But again, it's not your job to be an expert on that. The CDC will walk you through it. Again, I'm just giving you that so you can look, if you're interested, and see what they will ask you for. It's very similar to what I covered on the 7A side. So it'll be very similar. In terms of microloans, each microlender will outline what is required to apply with them, so you should contact them directly. At a minimum, they'll ask you to fill out an application and then ask for documentation needed for them to make an assessment of your operation and the requested funding amount. And I've given you the link there for the microlenders. We have for several years now been asking lenders to provide to us some guidance that they potentially would give to a small business applicant, and we've got just a couple here. So in terms of the projections, you want to make sure that your projections are realistic and attainable. You may have heard the phrase pie in the sky. Lenders will often mention that they receive projections that are not realistic. So that's where Allie's group can help you. Look at them, make sure they're realistic and attainable, and also to outline the assumptions that you've made when you were putting those projections together. They can help you with that. And then most lenders will use industry data, like the Risk Management Association data, to determine if your financial metrics are in line with industry averages. They'll look at your gross and net profit and some other net profit margins and things like that. I've given you a link here where you can read definitions of those different financial metrics to understand that. But you should keep that in mind when you're preparing your projections. The bottom bullet here may be obvious, but they say that often, a small business will apply for a loan. The lender will say, well, I need some additional items. So they might give you a list of 5 items. You send back only 2. That will not move your application forward. You need to get all of them together, all 5, and then submit them to the lender, and then the lender can move your application forward. They say that the time delay is often sort of that back and forth, requesting documents, and then the small business does not provide all of the information that's needed. I mentioned that we would provide you a list of SBA lenders. I think everyone on this call is in Virginia, so this is a list that we maintain. Uh, and you could look at the list. We recommend that you usually start where you have some sort of account already. So if you have a personal account somewhere or a business account, I would approach that lender first because they may be more willing to assist you since they have a track record. And then you could move on to some other lenders if they're unwilling to help you. In addition to that list I just mentioned, there's a system called Lender Match. It's an online system that's available on our website. It's a questionnaire where you outline your business, describe your business and then outline your financing need. And that will get sent out to any lender who signed up for where your business is located. If the lender is interested in speaking with you, they will opt in, and then you will ultimately get a final list of lenders who've opted in, and it's your choice if which ones you want to speak with. I will mention, and you'll see it on this slide, one caveat with this system. So every lender on this system is an SBA lender. You won't have any non-SBA lenders on this system. However, what we're seeing sometimes is that an SBA lender who is on that system may try to refer you to some of their non-SBA partners. So if let's say you fill out the questionnaire and you get a response back, and the lender quotes some sort of loan option that has an excessive interest rate or a maturity that's very short, that's very likely, well, especially if it has an excessive interest rate, it's not going to be an SBA option. When you receive the loan chart that I send you, you'll see that we cap the interest rate, so we set a maximum. The lender's not permitted to go over that. I think the last time I checked, prime was 7.25, somewhere in that range. So we allow the lender to go over that spread over that amount, but you're not going to see an SBA loan with 25%, 30% interest rate. So that's not going to be an SBA option. So what I would do in that case, if you receive some sort of offer and you say, well, this doesn't look right to me, I would first say to that lender that contacted you, is this an SBA option? And then, it's your choice what financing arrangement you enter into, but we strongly discourage you to enter into those sort of excessive interest rate, short maturity options. So you can just say, no, I'm not interested. You could, specifically ask them if the option they're offering is an SBA loan. I think this is the last slide. So these we publish on a weekly basis SBA lending reports. And the reason I mention this is it can help you in a couple of ways. You'll see the top link there. That's for our office. If you happen to be in the Northern Virginia areas that we don't cover, I've given you the link for their lending reports. But it can help you in two ways. One, it will list every lender who's made at least one 7A loan in the last fiscal year. You can go back, I believe it goes back 7 years. So that could give you an idea of which lenders are more active in our region. And then the far right column will give you an average dollar size. So that could clue you in if if the lender shows a smaller average dollar size, that might clue you in that they might be more willing to lend in those small dollar ranges. Or if you're looking for a very large request, they could help you with that as well. There's my contact information. And that's the last slide.
Wonderful. We do have several questions in the queue, but I highly encourage folks to use the Q&A function to drop those in. I will start reading them when you give me the go-ahead, Ford.
Sure. Go ahead.
All right. So first question is, I'm seeking a loan to develop and build a campground. Not quite the real estate project described as ineligible, but can you confirm eligibility of outdoor hospitality, recreation, camping businesses? As a clarification, the question asker already has a loan for the land itself, so the loan they're seeking is for development and associated costs.
Okay. So campgrounds are eligible, and I may put this in the chat. So our SOP, which is the document that we go by, talks about this in relation to hotels, motels, RV parks, marinas, and campgrounds, similar types of businesses. They are eligible if more than 50% of the business's revenue for the prior year is derived from transients who stay for 30 days or less at a time, and the business complies with all zoning and other legal requirements. So this person, it sounds like they're a startup business. So in that case, your projections would need to show that more than 50% of your revenue will be derived from those, they call them transients, stay for 30 days or less. So I'm going to should I put this in the Q&A or the chat, Allie?
In the chat, please.
All right.
And when you get a second, would you mind turning your camera on so we can see your face?
Oh yeah, I did do the thing, but let's see. How do I do it? Okay, there. Okay, so I put in the chat. So yes, you would be eligible so what we're getting at there is when they talk about transients that stay for 30 days or less, if it was beyond that amount, then it would be operating potentially more like an apartment building or something similar to that, which I told you was not eligible. But yes, campgrounds are eligible.
Got it. What does the technical assistance from the lender entail?
So that technical assistance was under the microloan program, and it can include many things, preparing a business plan, helping you with your projections, giving guidance. Let's say you want to expand your business in some aspect. They could talk to you about that and give you ideas on how to investigate whether that's something that you consider. So it's actually have I would say any general business assistance they would be able to provide as part of that. Again, that's provided only under the microloan program.
Thank you. That was helpful. Next question is, can you get a small business loan for a banquet hall for your current business? I'm wondering if the question asker could clarify if this is an initial brick and mortar that they're trying to purchase for their business or an expansion to an existing brick and mortar. Just a little bit of clarification on that.
And what I would say on a banquet hall, the way this question is written, it sounds like that only their business would be using that space. In other words, they're not acquiring that banquet hall to just lease it all out. So if you're going to either construct or buy a building, that will serve as the banquet hall, and it's going to be used by your business operation, that should be eligible.
Question asker, does that answer your question? I know we have the chat turned off, but if you could just drop that in the Q&A if we answered your question. In the meantime, let's move over to the next one. Should we assume that we need to prepare both a loan proposal and a business plan?
No, you just one or the other. You don't need to duplicate that.
My understanding correctly that the business plan is typically part of what lenders would look for in that loan application.
Right. So here's the way I look at it. The business plan would include many of the items that would be in the loan proposal. Like I said, that's more of an overarching because it would have your financial information in it. So you don't need both. You could just prepare one or the other. Got
it. And I had a follow-up question to that, asking about the typical length of a business plan. I think that would depend on the details of your business, and what would be more important is the components of that business plan. Is that correct, Ford?
What I would also say, and I'm sure, Allie, you see on the SBDC side is two things. One, a lender is definitely not going to be interested in a 50-page business plan, number one. And then the other red flag for them often is if you get someone to prepare it for you or use some sort of uh, software that generates that, and you can't speak to what's in there. That's also a red flag. They don't want to just see, a bunch of information, especially if you can't speak to what's in there. They will ask you. I describe this often as you need to go into these meetings with lenders as thinking like a lawyer. You don't. I'm not telling you to be, scared or anything, but it's like going into a court where a lawyer goes into court and they anticipate the questions that they will be asked, or that the other attorney is going to focus in on. So you need to go into your meetings with the lenders like that. You need to anticipate what they might ask you for or ask you about, and then be prepared to speak to that. And we do have on I can't remember if I had it in the slide deck, but we do have our own website that has extensive information on preparing a business plan. But again, Allie's group is there to help you with that. They do that on a regular basis, every day. Yeah.
Thank you. Yes, we are. Our team is very, very comfortable with helping you build business plans, reviewing ones that already exist. So please do reach out to us. The next question is, how often do lenders approve zero down loans with no quote unquote skin in the game for businesses that are well established and are over 20 years old?
So I will say that some lenders will make loans without requiring an equity injection for established businesses. Not it'll depend on the scenario, but let's say you have been in bit well, they said 20 years, and you have a decent net worth for the company. They may not require it, but it'll depend on the lender, and it's their decision in terms of uh, whether they'll do that. I would say, because the person said, "How often do you see that?" I don't know that I would see that often, but it's potentially possible.
Good to know. So the next two questions are both kind of related to doing business in Virginia or out of state. So the next question is, are the SBA loan programs the same from state to state? For example, the question asker recently moved from Virginia to Florida.
Yes, all of this information that I've provided is the same across the United States. All of we don't. In other words, we don't have special programs for particular states. So the loan chart that you'll get, the loan chart will have my contact information on it. So I may not be the best person, but you could check our website and find the Florida SBA staff there and contact them. But yes, all the programs are the same across the country.
Thank you. And then, so the next question was, can you apply if you plan to open your business in Virginia? To which your answer was
Yeah,
the loan
yeah,
programs are the same across the state.
right, right, right.
Next question, I'm going to make a little bit more general. What are some of the biggest red flags that lenders are watching for? The question asker was specifically interested in those related to manufacturing businesses or starting up manufacturing. But if you could answer from a general and then more specific.
We talked about some of this, so I don't know if I would call them red flags, but they're definitely going to look for your expertise in the industry. So if you're starting a business, uh, they're going to want to see what that expertise is. And again, if you don't have it, if you don't have the full expertise that you need, that if you're going to hire someone, they would want to see that you have that. Um, the equity injection, you're going to be required to provide some sort of equity injection if you're a startup. So if you don't have that, you may want to work on that and build up some cash reserves before you apply to a lender. We talked about the projection, so I will call this a red flag. If the projections seem wildly unrealistic, you haven't outlined how you came up with those figures. You know, what assumptions you made. Did you look at your competition? Did you do some market research and make sure that there's a market for your product or service? All of those things would be a red flag. Um, let's see what else. Well, we talked about your credit history. Of course, if you SBA used to set a credit score for one of its programs. We got rid of that score. We don't do that anymore. But as I mentioned, the lender will look at your personal credit history and your score. And we again don't keep a running log of what the minimum score is for lenders, but they will have one. Some of them, for instance, won't lend less than if your score is less than 620. We see generally that micro lenders are often more willing to consider applicants that have a lower credit score uh, because they've got that technical assistance component and just because of the size of the loan. Um, but under our 7A and 504 programs, like, well, I've never heard of a minimum credit score under 504. I'm not saying there isn't one, but we mainly hear that on the 7A side. So again, the lender will decide that. They will be able to tell you what their minimum score is, but anything you can do to improve that information before you approach them would be a good idea. I don't think of what else. Maybe I can think about it. If I think of anything else, I can bring that up.
Appreciate it. So we did have another question come in. You mentioned needing to be in business for approximately 3 years. I've been in business for 20 months and want to move into a brick and mortar. Do I need to wait to apply for a loan until I hit that 3-year mark?
Okay, so I didn't say that you needed to be in business for 3 years. Because SBA has no restriction on brand new startups. The issue, if you want to call it that, is that many lenders will have some or potentially have some minimum. I know there are some lenders that do require businesses to be in business for at least 2 years, but that's not an SBA policy. That's the lender's policy. So you'll just have to inquire with several lenders. If one says, there's a 2-year minimum, you would need to find another lender. But I don't see any reason why you would need to wait. I mean, the person that's asking this question, one thing I would look at is, are you profitable? Are you able to show, would you be able to show repayment at this stage? And then you would need to, if you're going to buy a building, get some sort of quotes uh, related to how much that might cost, and then look at your payments and would you be able to meet those payments.
I have a similar question in the queue. Is it better to close 2 businesses to purchase a building or keep one open just to have the income history?
Well, that's an interesting question. We would never recommend. I mean, your decision regarding closing any businesses or opening one is yours. I don't. All I can say is there's no prohibition on closing or opening and those sorts of things related to buying a building. It's more, we talked about what is eligible when you're buying a building, uh, but I don't. I think some more information is needed, and you could talk to the SBDC or a resource partner and talk about that in more detail. Yeah.
Thank you. And I'm going to drop my information in the chat box again for folks to have it so that they can reach out to us with some of those more specific questions related to their businesses. In the meantime, Ford, are there any other kind of, not necessarily red flags, but things that business owners who are interested in applying for loans should be cognizant of?
Uh, so let's
Or frequently asked questions?
Yeah, and I think I've covered many of them. So let me see what else I can think of. Uh, again, having your dollar amount, your specific dollar amount that you're applying for, and what you'll use it for, an outline of that is something that you should have. Um, I think of what else.
I know one question we've gotten a few times is, are there any specific SBA loan programs that are designated to support veteran small business owners?
So we don't have any separate lending programs just for veterans, but I can tell you that our SBA Express program, we didn't talk about this, but on our 7A program, there is an upfront borrower fee, and that's outlined on the loan chart that Ally will send you. But uh, for veteran-owned businesses, so if the business is owned at least 51% by veterans. It can include their spouses. It can include National Guard members, reservists, widows and widowers. So if all of those parties own at least 51% of the business, then SBA will waive that upfront fee if the lender is making an SBA Express loan. And that will be on your chart as well. So we don't have a separate program just for veterans, but we offer that fee waiver again to any veteran-owned small business. Let me see. Let me see. I might be able to show some things on our website. Let me. Oh,
Thank you, Ford, for looking that up. And as a reminder, please, folks, if you have any questions, no matter how big or small, please do drop them in our Q&A. We have about 20 minutes left in our scheduled time, so we have plenty of time to answer them.
okay. So you should be so under our business guide. That's where we got information on preparing a business plan. Doing your market research, competitive analysis, calculating if you're a startup. I think they've even got a template that can help you calculate your startup costs. Uh, and then other information about registering your business, as choosing your business structure. Again, but I'm not Allie's group. That's what they do also every day, all day. But if you just wanted general information about these items, opening a business account, business bank account, obtaining business insurance, different things like that, you can find that through our website. Um, And I mentioned the lender match, so we've got lender match here, but I explained that. Let's see what else I can tell you about. I thought I was going too slowly, but I guess, or excuse me, I was going too yeah, but I guess I didn't time my comments. So let's see what else I can cover.
Not to worry. And we did have a couple more questions in the chat. The first is, or in the Q&A, the first is clarifying on that 20-month question that was just asked. Question asker said, thank you. Yes, they are currently profitable, though operating as an educational consultant, teaching classes. Spent the last 20 months building a customer base, and am now looking to expand into a store to also be a retailer. Can you provide any, or they appreciate knowing the terms may vary from lender to lender given their time in business. And then for the question asker who asked if we will be sending out the slides, yes, I do my best to send a follow-up email with the slides and the recording within a week of each webinar. So please be on the lookout for that. And then another asker asked, is there anything on light manufacturing prohibitions or benefits within the SBA loan programs that they should pay special attention to?
So we definitely do not have any prohibitions on manufacturing. In fact, we, with the new administration, there's a heavy focus on that. So we do have several things, but it sounds like this is a startup manufacturer. So one of the items in my slide deck. Oh, you know what? Let me see if I can find that quickly, because I just did this the other day. Uh, Okay, well, I'm just going to say this while I'm talking. So SBA has established what they call a red tape hotline. Oh yeah, let's see if I think I've got it here. Yeah, okay, here. I'm going to share this. Uh, so they've established a red tape hotline. So if you're a manufacturer, small manufacturer, and you happen to be subject to uh, federal regulations that are imposing excessive costs, you can fill out this, you can contact our Office of Advocacy, and they will look into it and communicate with the agency that has that regulation and potentially see what can be done to either reduce or eliminate it. I didn't mention this, but I should have. So related to, I mentioned the fee waiver that we have for veteran-owned businesses. We also, in the current fiscal year, are waiving the upfront fee if the loan is to a manufacturer. They have to be in the NAICS sectors 3-1 through 3-3, and the loan amount is $950,000 or less. That would be under our 7A loan program. We're waiving that fee. We also have several programs that are focusing on manufacturers. So we have a new program called the Manufacturers Access to Revolving Credit Program. That offers working capital, again, only for manufacturers in the NAICS code 3-1 through 3-3, up to 5 million. And I can actually add this to the slide deck that I'll send to Allie, and you can click on this link and find more information about that. We've also expanded. We have an international trade program, which we've expanded recently to focus on businesses that are at a competitive disadvantage due to foreign competition, import competition. And again, when you get this slide deck, you can look at that. We're offering a higher guarantee to lenders, which is again our inducement to encourage them to lend to small businesses. And then we also have a working capital pilot program. So these last three bullets here are for working capital purposes, but they're focusing just at least to some degree on manufacturers. Let's see. I think the original question was, well, definitely, like I said, manufacturers are eligible. I don't know of any specific red flags. I do know that a challenge for many small businesses currently is finding workers, employees, and potentially, I don't know if you can your staff Allie can sort of help navigate that, but that's a challenge related to I would say specifically to manufacturing.
Related to the manufacturing, we had a couple questions come into the Q&A. The question asker says that they're preparing their documents, but they don't really know what to ask right now or what key points they need to make sure they hit in those documents. And for assistance to manufacturers, I'm guessing based on the timing of the question, they're wanting to know if like they should be outlining kind of what assistance they need related to these programs within their business plan.
Well, I would say so for all businesses, I think what I've outlined will be similar. So I don't know what they're going to use the funds for their loan, but if they're going to buy equipment or they're going to buy a building uh, to house their manufacturing facility, you would need quotes, or potentially what the cost of that would be, and then of course that there's a justification, if you're going to buy a building, to that you're going to use that full space for your manufacturing operation. Uh, I mean, the items the items in the application are going to be similar, or the same as to what I outlined in the slide deck earlier. So uh, it would depend on what you're using the money for. If you're a startup, you would need to show the projections uh, that that indicate that you can operate the business and repay the loan based on your sales. So it's very similar to what I was covering.
Thank you. And for that question, ask for those kind of don't know what you don't know type questions. Those are great questions to ask some of the capital pathways advisors. They have, a plethora of experience across a range of um, business types of businesses and loan options, and have a lot of experience working with SBA lenders. Shifting gears back to the questions, are lenders less likely to fund working capital and expenses compared to assets? And or do you have any advice for requests focusing on funding working capital?
Okay, so I would say for the working capital, you will need to outline for the lender, and I mentioned this earlier. Let's say you're a startup, uh, they will ask you, you're going to put down a figure. Let's say you put down $50,000. They're going to want to see something that indicates why you need that $50,000. So if you're a startup, uh, one of the so working capital can be two things. Let's say working capital for a specific purpose. Let's say you have a new marketing campaign and you're hiring someone related to that. That would be for a specific purpose, and you can point to that. How much you were going to pay them, but it also may be, like I said, if you just want it to cover your ongoing day-to-day expenses for a period of time, the lenders will look at your projections and to justify that dollar amount. So if they look at that and they see that your shortfall month to month is not near that 50,000, they may not approve the 50,000. They may say, okay, well, we won't lend you 50. We potentially would only lend you 30. So you can explain to that. And I don't know if this is if this is part of the person's question, but I can tell you that SBA's policy is you can't just get working capital to put in your business bank account and sit there just in case you need it. The lender is going to want to see a that you're going to use that pretty soon after you get the loan. So you can't just say I need 50,000, but I'm gonna put $20,000 in my bank account, and I'm just going to keep it there just in case I need it. That the lender is not likely to we're not likely to be able to provide that. It has to be something that you're going to use uh, within a relatively short time after you apply for the loan.
Got it. All righty. I'm gonna give us a few more minutes for questions, but barring any additional ones coming in, I think we will close it out. Aha, course. When I say that one, questions always come in. And this is one that we get a lot. Do you have an idea of how long it usually takes to approve and fund a loan, or specifically a working capital loan, once all the documents are provided?
So I can tell you that. So I mentioned the Express program. Well, I'll just use that first. So under the Express program, that is what SBA calls a delegated program. So under that program, the lender actually gets to make the credit underwriting decision completely on their own. They don't have to send documentation to SBA. So that potentially the turnaround time on that will depend on the back and forth between the small business owner and the lender. There will be no SBA turnaround. All the lender does is they go into a system that we have. They enter information about the business, et cetera. They would have already obtained your application. I mentioned that in the slide deck. And then they just press a button and they get the loan number within. It should be no longer than maybe half a day if there are no issues with it. So that would be, in terms of the SBA turnaround, that's immediate. For our other programs, for our smaller loans, I've seen some lenders get a 1 day turnaround, so they still have to they send it to SBA and we make the credit underwriting decision. But for those smaller loans, I've seen a fast turnaround. And then if you get into the larger loans, let's say over 350 up to the 5 million, yeah, I would say you're looking at least 2 weeks. That would be the SBA turnaround time. But again, that's going to be on top of the back and forth between the business and the lender.
Thank you. We had a couple more questions pop in. Would lenders likely lend for equipment? The question asker is a startup asphalt company, but they have no capital. They would need a loan to purchase the equipment and for working capital, as their credit isn't the best. Do you think they would qualify for an SBA loan, or is there a women-owned business loan?
Okay, we don't, just like with veterans, we don't have special programs for women, just like we don't have special programs for veterans. Our programs are open to everyone. I would say there is going to be a challenge. If you're a startup asphalt company, you are going to have to bring some sort of cash injection to the table. I don't see that you would be able to get a loan if you don't have some sort of equity injection to put down. Um, and again, the only thing I can recommend there is, uh, well, okay, two things. One, take some time and save up some, certain equity injection amount. The other thing is SBA under its 7A programs, we generally do not like to see borrowed equity, but they will allow it if you can show repayment of that loan that you got for your equity injection from a source other than the business. And it can't even include your salary from the business. So let's say you are married and your spouse could cover that loan for the equity injection, then that potentially could work. But if you're not married and you don't have some sort of secondary repayment source for that equity injection loan, then you can't borrow the equity. So then you're back to square one. And if you don't have any equity injection, I think that's going to be a challenge. In terms of the credit score, I'm not asking you to provide what your score is, but as I said, well, each lender will have their minimum score, and if you don't fit into it, you should do something to improve the score, or you could talk to the lender and see if there's anything they can help you with. But it potentially could be a challenge if you have a low credit score.
Thank you. And again, just referring to my presentation earlier, Capital Pathways does have a credit improvement program that we are working through. So if folks are interested in that, please do reach out. Next question. I've been told that there are banks that do 7A loans, but don't have experience with 504. If I need both, should I find a lender that can do both, or can the loans be with separate lenders?
What I would say there is the most common structure is if the same lender does the 7A and the 504 loan, just because that's lenders like to have the whole deal, so to speak, the whole transaction. So here's what I recommend. The CDCs, the Certified Development Companies that handle the 504 loan program, they have their own list, if you want to call it that, of lenders that they work with. So I would encourage you to contact the Certified Development Company. You could tell them who your lender is, if you're working one, and then they could tell you I could tell you most or any commercial lender, whether that's a bank or credit union, they don't need a special agreement to do a 504 loan. They don't need a special agreement with SBA. So if they're an operating commercial lender, I don't see any issue with them participating in a 504 loan. But I would ask the CDC, if they could connect you with a lender, and often they'll be willing to do that, or give you a reference, and then you could talk to the lender. And then I gave you a couple examples. I know we're about to run over time, but I gave you a couple of examples where you can use a 504 and a 7A. So a business acquisition where the real estate is done through the 504, and then the sale of the business is actually done through the 7A. So in that case, that same lender would be likely to do both. They would participate in the 504 and the 7A, and then also, if you were, going to get a 504 for the real estate, and then you needed a line of credit or something, again, the same lender is likely to be the one that provide. I don't think I've seen a case where it was different lenders, just because that's just a lender preference. They want to be involved in all of it generally.
Thank you. And we have two final questions, and then we'll ask them, and then we'll close out for today. First one is, what does it mean for a lender to be an SBA preferred lender?
Okay, so a preferred lender. So I mentioned earlier that the SBA Express program is a delegated lender program. The preferred lender status is another delegated designation. So the Express program is limited to 500,000 or less, but the preferred lender program, the preferred lenders, they can lend up to 5 million. So the way it works, similar to Express, if they're a preferred lender, they are permitted to make the credit underwriting decision on their own. They do not have to come to us for approval. And I would say most, and it should be all, but preferred lenders are the most experienced SBA lenders. A lot of them will have their own dedicated SBA department. They should definitely have the expertise needed to process an SBA loan and potentially expedite it. And you'll see when you look at the list I have in the slide deck, we designate which lenders are preferred lenders. You're not required to work with a preferred lender; that's your choice. But you'll see the designation on that list.
Thank you. And I know we have a couple more questions that just dropped in. I highly encourage those folks to reach out to me via email. We are at our time for the day. So again, my email address is there in the chat. It's capitalpathways@virginiasbdc.org. And Ford, how should folks reach out if they want to contact you?
Well, remember now, I'm going to send you the slide deck, and my contact information was on the last slide.
Wonderful. All right. And as a reminder, folks, as Ford said, I will be sending out the slides and the recording of this presentation. Look for it within the week. And I appreciate everyone for joining us today. You had some excellent questions. And thank you, Ford, for the great information and great presentation.
Thank you. Thank you, Ellie.
All right. Hope everyone has a wonderful rest of your day.